All right. Good morning, everybody. Waiting on data, as we have been. The market continues to front run the Fed and call them liars. Pricing in 5 rate cuts for next year in the US and 6 rate cuts for next year in the EU. The consensus seems to be that the Fed is trapped. They have to cut, and they just don't want to admit it yet. That's an odd place to put us in. It's reflected in the market waiting on every little bit of data to prove that they're right and the Fed is wrong. That leads us to the job numbers. It's been job numbers all week between JOLTS, ADP, and tomorrow non-farm payrolls. This could very likely change the course of the market between now and all the way to next March, really. So waiting on data. The NASDAQ is up 0.25%. Thanks, AMD. While the rest of the U.S. markets are basically flat, Russell is down a little more than 0.25%. Hong Kong and Japan both down. Japan closer to 1.5%, and Hong Kong closer to 1%. So we're going to get initial jobless claims. Looking for a change in the numbers here between previous at 218 and the forecast median estimate at 222. So the consensus is that we're going to get more unemployment numbers than we did last time. Bad news is good news, and that dichotomy hasn't changed yet. Bad news is good, good news is bad. Until that changes, and or the market gets on board with the Fed, or the Fed gets on board with the market, whichever way you want to run that one, then it's just going to be the same old, same old. Initial jobless claims has a history of causing some volatility. So we can see the impact forecast here. And we've got some European Fed speakers, but of course, US is in blackout. So if the Fed does say anything, they'll run it through that Nick Tamaros guy. You can search for him. The Fed Whisperer on Twitter, should be able to find him. We do have auctions this week, or today, 11:30. And here's the spot gamma levels if you want to capture a screenshot. I tend to use Snagit for my screenshot software. You see, it's just hotkey accessible. I hit a button on my keyboard, it pops up. Take a screenshot. And then you got it. You can also just hit print screen if you don't have something like that. Or if you're on Windows, you can search for Snipe It. It's a little built-in tool that'll allow you to take a centralized screenshot. You can also just hit the little Windows store and type in screen capture. You should find something for free that you don't have to pay for. So we got the 10-year under VWAP, which gives the S&P and the NASDAQ above VWAP. US dollar Japan had a significant sell-off. That should have given a reasonably decent move in, say, precious metals, gold. And yet we're getting these after this nice sell-off in the dollar, which coincides here, right? This is US dollar Japan, so US dollar. You get the sell-off here. The dollar's already trying to bounce back up, even though this really isn't. It's kind of just stalled out. Just keep in mind that oil affects bonds. Bonds affects yields. So if you've got some kind of disconnect between the 10-year and the dollar, you got to figure out where the disconnect is. And, you know, hey, to be fair, you're not always going to find it. Sometimes you'll find it. Sometimes you won't. Right now, the disconnect between the dollar and the 10-year is oil. All right, so I've got last week's range here. This is a weekly chart, 2 weekly candles. That's last week's high, last week's low. We marked that out, kept the 50% mark. And the idea was we need to close at the end of the week above this level, or it kind of calls into question this bullish move all through November that got us to the level that we are now. Now, it's been a beautiful run to get us there, but for the last 2 weeks, we've done nothing but stay inside this range, 45, 44 to 4,600. We're just there. So this is what we're waiting on to change, right? And it's not going to change from technical analysis. There's nothing out here that's going to give us clues as to where we're going next. Should we be bullish, bearish, long, short? We need these economic data points. So what we want to do is identify key levels, recognize where those data points are and when we're going to get them, watch the clock, and then get the move that goes to our levels. Not that bad. Volume is normal, sitting at about 105. That's exactly within normal range. If it was really low, say below 60, we'd be concerned, be looking for, say, a market maker move, trying to figure out why are they sitting out? What are they waiting on? Who isn't present? Because sometimes when we get that low volume, it's because some other nation around the world wasn't trading it in the overnight hours because they were closed for a holiday, for an example. If it's too heavy, see the volume somewhere around 208 when we come in the morning, then again, we'd want to find out why. What caused all of that trading in the overnight hours? Try to hunt that news down. So this has been a topping pattern that's lasted a little longer than I think any of us would care for. We do have a solid 2-bar reversal, but it needs to follow through. And we can see all these wicks along the bottom here that we keep getting bid back up again around that 45-50 area. It is what it is, right? At some point, we're going to absorb all of that liquidity and make our way through it, or we'll, begin to expand. But again, no amount of technical analysis is going to resolve this for us. It's going to all come down to the data. But that data has been something that we've been waiting for all of this time. And it's just about done. All the waiting is coming to a head tomorrow. Some of it today, the rest of it tomorrow. This whole week keep in mind that this whole run was the market saying the Fed is lying and pricing in rate cuts that the Fed has not said they're going to cut. The Fed continues to say, we're not cutting. We have no reason to cut, and we might hike. Well, they called BS on that. No hike. Just straight saying the Fed is lying. And they started to price in those cuts, which is why we had such an exuberant move. But we've stalled out here waiting to see who's right. And that's what we're kind of waiting on. Just keep in mind, next week is FOMC. So tomorrow, when we do get these numbers, we're still going to be on pause on this hurry up and wait until next week when we get the Fed speaking. Sure, we're going to get a move. Don't get me wrong. The numbers that are going to come in today and tomorrow, especially tomorrow, is going to give us the opportunity for a liquidity gap and a good 1.5%, 2% move on the day. It's possible. But then we're going to go right back into hurry up and wait for FOMC and Powell. So the waiting ain't done. It's a very data dependent market right now where bad news is good and good news is bad. $10-day, 30-minute volume profile. We've now got a 60-point 10-day range. I mean, that's tight. We've seen it tighter, but not often. By now, we have a classic B. So we do have some risk to the upside of flash crash upwards. It's shallow area. We can rip through those shallow areas really fast, but there's not really a lot of sustaining impetus. So we get there and we just fall back down again. It's like throwing a ball in the air. There's nothing to catch it. It just comes back down. We're at the lower edge of the profile. So below this key level of 45.50, we've got a pretty good size air pocket down below 4,500. Can make that move relatively quick. We got a new VPOC from yesterday. So when we do cut to the upside, that 45.71 is going to be a level of concern. You can see how narrow the range is from the overnight, how tightly compressed we are. We still got that move between 2 and 4, the kill zone. But other than that, really just don't have a lot here. We took inside day breakout a number of times this morning and managed to pull it back in. I think that's going to be a level worth focusing on. Yesterday's low, even though we've crossed through it a number of times already, is still a key level. So it's definitely worth marking that one out. It just doesn't have the weight that it would have if we had not yet hit it. Below yesterday's low, we'll focus on our own Globex low. If we break down below that, 45.44 and then 45.40 will be the quickest, closest pivot points. We're underneath the 10-week. Excuse me, the 10-day. We've got a missed daily pivot. We haven't hit it. And we are considerable distance from the weekly pivot point at this location. I mentioned 50, 45, 44 in that measured move. It's also the previous week's low. Isn't it awesome how you get the same numbers from different approaches? We just had that number because we measured the range and projected to the downside 50% and then 100% of this range. $45, $44 lands right on the previous week's low. So if we do break yesterday's low and then our own Globex low, we'll focus on last week's low. Then 45.40, and then the ADR half, 45.36. Yesterday, we hit the ADR half on the high side right before the market opened. When you hit the ADR half that early in the morning, it opens up the opportunity to go to the other side and hit the other half. And that's exactly what we did, which is pretty cool. And I called that out when we got into that level yesterday. The ADR half was right there, basically 45.93-ish. So we cut through it, came back down below it. When we got into the RTH, we popped back up and rejected against it, fell all the way down and hit the bottom side of the ADR by the end of the day. That's where those out of the money call options and put options come in, right? On a day like that, real early in the day, being able to target the entire other side of the ADR, almost, an entire 1% move in the other direction. So I want to focus on those ADR levels, right? The average daily range. It sounds like it's some complex thing, right? But it's a 21-day average. It's like Groundhog Day. Same thing, day after day after day after day after day, day, again, again, and again. It's what we have been doing for the past 21 days. What do you think we're going to do today? Same thing we did yesterday. Why? Because it's the same thing we did before. It's a rare thing to not hit one of those red lines. So then the key becomes, well, we're right in the middle. Which one are we going to hit? On a day like this, who knows? The numbers are going to point us in the direction. The ES is flat. We haven't gone anywhere. We're in the center of the basketball court. We could go up and hit the red one. We could go down and hit the red one. But yesterday, we started out already on one side of the court. There was really not a whole lot of choices on where we were going to go if we did go down, except to the other side of the court. I'm pushing Thinkorswim too hard. There we go. As we would expect this morning, gold's up with the drop in US dollar Japan, well, gold miners. And a little bit of communications, but they're close enough on communications that it's not quite there, but it's close. And jets were there and they fell back out again. But on the positive side, like that's all we've got. Try to look at the negative side. Nat gas is down, Bitcoin, bonds, well, TLT. A whole lot of nothing while we wait on these numbers. AMD's getting a bump this morning. They've changed their forward outlook on this new smart chip that they're going to be pumping out that directly connects to, those AI servers. And they said that their estimates were not even close to the demand that they're getting for these chips. And that's why AMD had a pop this morning, which is why the NASDAQ was up more than 0.25%, while the rest of the indexes were flat and waiting on data. So pot stocks are up, kind of just testing against yesterday's high. We're not really getting much beyond that, but I mean, it's a good start. It's just after such a fantastic move, you really got to kind of assume there's going to be some digestion at that level. And after crude fell out of bed, it's getting a little bit of bump this morning to the upside, more of mean reversion than anything else. Gold miners, that strong push to the upside. So here's nat gas. They say that this is a weather trade. So, we got that bump back in October, like it was really going to finally come out of this range and try to reclaim some of these levels. And then it just stalled out. Now it's dumped back down inside that range. The thing is, there's a lot of eyeballs on this, and they don't want that, right? They want to move this sucker when nobody's looking so they don't have to share the glory. So, all the bag holders are just getting beat down. They'll wait for capitulation till everybody bails, and then they'll spike this sucker back up again. But we ain't there yet. Got this move in gold that got unwound really fast. Now I'm on a daily chart, so you can imagine the size of that move, the speed and the quickness of it. But that gives us a level to mark against. So now 2083 is the 50% line of that really big bar, and we're IX10. We're sitting down here. Now I'd rather be IX10 in a very small range like this than inside this really big range. We can sit down here chopping at this level for a long time. It doesn't owe us a break and a run. But the way that US dollar Japan fell out this morning, really would have expected more out of gold and silver. So silver's down. Gold is barely up at all. And this could be down because it just hasn't gotten any flows yet this morning. That's not much for flows, right? So, we could start to see this turn around, but so far we're not. And Kathy Woods was out promoting Bitcoin yesterday, of course. It's what, it's what she does. They were playing one of her interviews on Bloomberg this morning. She was giving out some radical numbers, but one of the reasons for this push is because that Bitcoin ETF is getting close to perhaps being here in the US. So there's the buy the rumor, right? But at some point we're going to get that news and it's going to be sell the news. I don't know when, when that is going to finally happen, but till then, we would continue to focus on not necessarily just Bitcoin, but the Bitcoin proxies, Riot, Mara, Hut, Hive, all of those, right? Coin. It's got to be something, right? Rather than focusing on the indexes when there's just nothing. The 10-year bonds were getting some attention this morning. They had more flow than anything else. ZB was sitting at 127K and the ZN is sitting at 530K. That's more, that's 3 times more, 2.5 times more than the ES futures volume. There's always something to trade, right? So that's the long and the short of it right there. Keep your eye on the clock. Watch for the data points to come out today. You already got our levels. They're not hedging. And tomorrow's the big one with non-farm payrolls. Yeah, that's good background right there. So January 10th is supposed to be the date for the Bitcoin ETF decision. Just to give you a timeline for that. Thank you. That's awesome background. I think between today and tomorrow, I'm going to flesh out some trade ideas for this FOMC event. Try to lay out some butterfly plays or something, right? Maybe some out of the money YOLOs, something like that. We'll see. There's really not much otherwise within the indexes. It's not much to focus on. I'd focus elsewhere. Refiners, transportations, communications, even cybersecurity was getting some moves. Something other than the indexes. Gold miners. And that's what I got, guys. Watch the clock.